Hello traders, Gary Wagner here, just about 12 noon in Honolulu, 5 o'clock in New York. It is Tuesday, 10th day of November 2020, and this is the daily report for gold and silver. Gold and silver staged a very respectable recovery today after the dramatic sell-off that took gold about $100 lower yesterday and silver down by about 6%. We'll talk about that and support and resistance levels when we look at our charts. But first, let's take a look at current pricing. After the announcement yesterday by Pfizer and another pharmaceutical company that they had developed a vaccine that has a 90% effective cure rate, and it is now through with stage 3 trials, we saw gold plummet, trading down $100 on the low. But that was to be short-lived, because today we've seen the market recoup rather quickly, currently trading up $18.30 and currently fixed at $18.7290. Spot gold also had nice gains today and is currently fixed at $18.7370, putting it up about $11 and change. Silver gained about 2.3% in trading, or 55 cents, 24.5 cents. And then lastly, the dollar was in essence unchanged, fractionally higher, 92.78. Let's take a look at our technical studies. Although gold is trading near the lows achieved yesterday, which came in at about 1845 or so, market's currently at 73.10, we can absolutely see the low of yesterday corresponds precisely with an important Fibonacci number, the 38.2% retracement. That, to me, gives us some hope that the recovery from yesterday's sell-off will be quick, because it was a knee-jerk reaction. It's great news that we developed a vaccine, but as I talked about in our opening letter, this is going to be, if not a half a year or longer, before it is readily available to all that want to take the vaccine. And so it's not going to be instantaneous. Secondly, we're still seeing tremendous peaks globally. In the United States, 100,000 plus cases, I believe, over the last couple of days. Enormous numbers coming in. So what are we looking at? If you recall, we entered our trade at $18.99. We did move our stops up, thankfully, on Friday to $19.18 and took about a $1,900 profit. But current pricing is still well below our exit price. My sense right now is I'd be very comfortable entering a long position if we see it move and break above the 100-day moving average. That would be a strong signal. Of course, the 50 would be stronger, but we'd have to make it through the 100 first. And ultimately, I would look for the market prices to challenge about 1940. That's the 23.6% Fibonacci retracement. That being said, you can see how these moving averages are moving together. We've got the shorter term 50 on the top and the longer term 100 on the bottom. What we do not want to see is the shorter term dipping below the longer term. When the 50 crosses above or below the 100, that is significant. So for right now, we are maintaining our neutral stance, but I believe today's action is significant and will probably trigger a buy signal for us. The other thing that we can say is that in terms of major support, we definitely see multiple areas in which the market traded to these areas, challenged them, and they were absolutely an area of support. The next level would be the 50% retracement, and we've got a whole series of data sets here showing it as resistance. So if we do go lower, I don't believe we would see gold trade lower than 1770. However, my best assumption right now is we will form a base at this lower price and then track back to recent highs that we have seen in gold. When we look at a daily candlestick chart of silver futures, which is what we have on the screen, we're using the same data set in terms of the rally itself, which began in the middle of March, In silver's case, at about $11 up to about $30, which occurred at the beginning of August. When we do that, we get a couple of key areas. The 38% retracement, that is definitely a level of support, and resistance can be found at 25.75. We can see that by these series of tops here. We're also getting a convergence of these moving averages, and that's because of the downside pressure recently. So I do believe that it would warrant our attention if we do go long gold to also go long silver. Let's give it another day for the dust to settle, so to speak, and then go from there. Traders, one of the reasons that I believe we saw such a quick recovery today from yesterday's sell-off is, although it is great optimistic news that we do have a vaccine that's been developed, it's effective 90%, that is great, but it's going to take a while for it to be produced and distributed globally so that all that want the vaccine can take it. Based on that, we're still going to need a lot of fiscal stimulus, government spending. That will devalue the dollar, that will raise gold, and that's why I'm still very bullish in terms of my market sentiment for gold and silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.